This is the $yen on the 60-minute time frame, and we have a head and shoulders entry at the right shoulder with a flag pattern completing there as well. All the workings out is already on here. It looks quite complicated, so what I'm going to do is do our top-down analysis and just re-look at how I've managed to get my entry, why I'm entering on the right shoulder, and the flag, stop placement, targets, and we'll come back and see why that is. So here we are on the daily time frame, and we have pretty much been in consolidation. New structure low, outside return, new structure low here, outside return, and we did make a new structure low there, but since then we have come up to this point violating this level. And so as we drop down the time frames, let's just delete that information off. Let's go to the 240. We're in consolidation, and in consolidation I look for consolidation patterns, and one of those patterns is a head and shoulders. And head and shoulders typically happens at the top or the bottom of a long run, and typically when we come into major structure, and that would really be daily structure. So here on the 240 you can actually see that head and shoulders clearer. Here we have the left shoulder, the retracement, we made a new high, we pulled down, very importantly. We've got a slanted neckline here, so this low here is lower than that one. We're now seeing a rally up. So let me remove the VS1 levels, and if we put a structure level left here, you can see that we're now testing that structure level on the 240. So as we drop down to the 60-minute, which is really where we can see everything a lot clearer, then we can take a look at our flag pattern. So we had quite a momentum move lower. Quite importantly as well, this violated the structure level, and since then what we've done is we've seen the market retrace up like this, and so we have a touch there. I should move that to there. There, 3 touches at the bottom, and we've come up for a touch at the top. Just let me go back to the 240 a second. Yeah, you can still see the flag pattern here as well. Okay. So what we've just had is just here we've had an inverted hammer, and let me put that structure level back in there, and as you can see that structure level has come right into our left shoulder here. So we've got the inverted hammer, it's a psychological number 111.50s, and we have gone overbought at 88, just over 88. And for me, for these flag patterns, this type of flag, I need a minimum of a 382 to be hit, and typically we will see this rally up to the 61.8 fib. We have done in this instance, and so I was able to use that as my entry. So I'm just going to bring back on the other chart. Okay, this is the other chart, and I'm just going to remove the entries so you can see this a little better. So now we can see here, here's the left shoulder in yellow, here's the head. We had the violation below coming into the right shoulder, which is the 61.8 fib, and we've got the RSI confirmation here for the head and shoulders, so I need the left shoulder to be overbought, and the risk to reward. Now this is a better risk reward than most trades that I would go for, and I'm only going for one target, and the reason for that, if I can just bring these back on, there we go. In fact, just let me adjust these. There's my entry now, there's my stop. So usually on these flags I would play for first targets at a retest of the lows and secondary targets at the extension. In this instance I'm not doing that, purely because I have more confluence indicating that we're going to go lower than I have just for playing for a retest of the lows. And the reason for that is we have the head and shoulders. We've already had a violation here to the downside for the head and shoulders. We've come into a 61.8 fib. As mentioned, I've got my entries in there. Here, this yellow line coming down, and then the retracement, and the yellow line coming down again. This is an AB equals CD pattern, and it comes in at the 127 fib. What we also have is we also have a 61.8 retracement. Where's that gone? Just let me draw that fib back on. I must have deleted it. Nope, that's not it. Okay, we've got a 127. Okay, just pause the video for a second. I thought we had a 1618 just here, but we didn't. It's lower down. I'll have to check the first section of the video I've done, but I think I was looking at secondary targets down here. But due to the risk to reward and the AB equals CD pattern, I didn't do that. But I think we certainly do have the possibility to go even lower down to this psychological number, the 110 flat. But nevertheless, I've got my entries and a very, very nice risk to reward here. This is looking like a 4-to-1. So let's just measure it out actually, just to make sure. So 29 pips of risk for a potential reward of 101. Okay, so we'll come back to this trade and see if it wins or not. And we're back for the last part of the video, and this was a losing trade. We were stopped out for, I've forgotten, how much was it? 29 pips. Okay, I stopped out for 29 pips. Unfortunately, yeah, the market spiked up. We've put in a rejection wick here, stopped me out. For me though, this is invalid anyway. We went too high for the flag pattern and for the right shoulder for the head. Sorry, for the head. The right shoulder has come too high as well, so none of these patterns are valid for me anymore. If we do drop down to the 60, we did get more confirmation really when we were looking at selling this market, and it came in the form of, I thought we had a double top here. Nope, I must be thinking of a different pair. And you can see that we just rallied up and yeah, got stopped out there. So losing trade for 29 pips. And this is the last part of the video, and we have now seen the breakout as I predicted. Targets were down at 110.38, which were that 127 extension. So the market has actually come down and hit 110.38. I think I was a pip or two in front of the 127 fib. Either way, both of those has now been tested, and unfortunately we were stopped out by 7 pips before the market put in this reversal candle. We then came down, we broke structure, and it's a bitter pill to swallow, a loss of 29 pips when the trade went on to win for 101.